Thank you so much for coming this morning and learning a little bit about buying a house. My name is Roose. I'm a mortgage lender at Frontwave Credit Union. I've been in the industry for the past a little over 15 years doing mortgage loans. It's so important to buy a house, and the sooner you can get into the market, the little bit it's better for you. But we'll talk a little bit more about that later. I'll let Jesselyn introduce herself.
Yeah, so I'm Jesselyn. I'm a real estate agent with Coldwell Banker in Vista. I've been a realtor since 2016. And first-time homebuyers are my favorite. They really are, because it's just an opportunity to learn and empower yourself and become a homeowner, which is like the American dream.
Let's talk a little bit about why it's important to buy and what apprehension you may have about not buying. When it comes to buying a home, it's the home ownership factor, but it's also building the personal wealth factor too. The longer you own a home, the more you pay off the home, the more equity you have, and the more of an investment you have, an investment that you can earn in a regular savings account or a CD, because those accounts don't earn value or don't gain value as quickly as owning a home may have for you. It's also important because you have a place to live with a fixed payment. And living in San Diego, that's a very important thing to have, not having to worry about the change in finances. It helps you plan your life a little bit better.
Yeah, so some of the reasons why people are afraid to buy a house are because they think it's really expensive, or maybe they don't have a down payment, or maybe their credit isn't an 850, if that's even a possible number, 800. But so those are some of the reasons why people aren't buying homes. But we're going to show you how it's not as difficult as you think. You don't have to have perfect credit. You don't have to have 20% down. And it's probably the same cost as you're paying in rent. So some of the benefits to owning your own home is that you aren't paying a landlord, you're paying yourself. So regardless of where you live, you are paying to live there unless you have some extremely beneficial circumstance, you live at your parents' house or something like that, then you're at least saving that money. But what's awesome about owning your own home is that you are actually paying yourself instead of somebody else's mortgage.
When you own a home, you earn a thing called equity. And a lot of homeowners are very concerned with this because equity is the money the value that you have in your home that you can take out at any time. So let's say you have a home and the home is, you paid $200,000 for your home. And now all of a sudden your home is worth $300,000. That extra $100,000 difference is your equity. And that's money that you can access if you need to. You can access it by selling your house. You can access it with a loan. If you have some emergencies come up, you have that as a savings account that's built into your home. And you don't get that as a renter. No one's going to give you equity because you lived in the house for 10 years. But if you're owning the home, after 10 years, you're going to have the equity just because you're making your mortgage payments. And a lot of times, you'll have the equity because the value of your home would have increased too. So it's a nice benefit.
So another benefit to owning a home is that you could potentially rent out part of it. So say you live in a rental unit right now with a roommate, you can take that roommate with you to the home that you own, and they can be paying you instead of the landlord because you're now the landlord. And so that rental income adds to your monthly income. And so it's like, maybe your mortgage is $2,500 and your roommate's paying $1,000. There's a cash flow because $1,000 of that is you're not paying and they're paying your mortgage for you. And a lot of people in North County, San Diego, actually look for homes that have a granny flat, whether they convert the garage into a studio or there's a building in the back that's separate and permitted or unpermitted, and they're renting it out to maybe a college student or as an Airbnb. There's a lot of options to take that monthly mortgage payment and make it less and make money off of it.
In addition to that, Frontwave has a really great program that we'll go over a little bit later, where this rental income, we can use it as part of your income that to help you qualify for more of a mortgage payment.
So a huge benefit to owning your own home is just pride and ownership. It's a great feeling when you can have your parents like come visit you at your home. We're kind of used to it the other way around, but when you're mowing your lawn, it's your lawn. When your sink breaks and needs a new one, I mean, it's your sink. So there's a difference between that and a rental unit. And so interest rates, historically, they've never been this low. And here's a graph if you want to look at it from the history. I mean, obviously not from the beginning of time, but from the 70s to now in 2020. When my aunt and uncle, who have been realtors for over 40 years, started in the business in the 80s, interest rates were 18%, and that was like normal. Then when my parents bought their first house in 1990, interest rates were around 10%, and that was good. For the past couple of years, they've been hovering around that 5%, which has historically been low, but now even more than ever, it's like less than 3%. So I'll let Autumn talk to you about that.
Yeah, depending on the kind of loan that you're going into, you could be getting a rate right around 3%. So let's say, for example, the rates, right, let's say the rates were 3.25 or 3.125. If you were to compare that to where we were last year, where the rates were 4.5%, you're saving over $100,000 and having over your life of your loan by having this lower interest rate, which monthly means you're saving around $320 a month in the same exact house just because the rates were so low. So a lot of people look at the rates as one of the factors with buying a home, but they also look at the price of the home as a factor. But with rates being so low, more people are looking at buying a house because they cannot recoup. Even if the home values go down a little bit, they won't, they're worried about them not going down low enough to recoup such a low payment right now because the rates are so low. So if you're on the fence about buying a home and you're thinking maybe I'll wait till next summer or next year, maybe prices are down, you may want to take into consideration that prices may be down, but this swirl of very low rates because of so many unique circumstances happening to our economy at once might mean it's a good time to buy now just so you can keep that low rate. And that rate's the same for 30 years with a lot of our products. So you can just have that nice little 3% rate for the next 30 years, even as things climb higher. So now that you kind of have an idea of why it's a good time to buy, what do you need to get started on this process? The home buying process can seem a little bit overwhelming because maybe you've heard stories about what you need to provide, but we try to make it very easy here at Frontwave Credit Union. We need to know that you make money somewhere. So we'll find out where you're getting your income from. We'll ask questions about the source of your income and get some information to prove that or some documentation for that. Your credit score does play a part in qualifying for the loan, but not to the point where you have to have perfect credit. So don't hold back on talking to one of us about buying a house because your credit score may not be perfect, because a lot of our loans, especially our first-time home buyer loan, the rate doesn't change because of your credit score. As long as you qualify for the loan you're in, you get the same rate as a person with a perfect credit. So don't let that hold you back. At least have a conversation to see if you're in the qualifying range. And we need to find out about your down payment. Some of our loans require absolutely no down payment, but almost all of our loans require us to have an idea of if you have some kind of savings account to help cover different funds, different fees that occur of buying a home. So just those few things are all we need to kind of get an application started and get you going into getting a home. Once you have those items done, we can help you. You can get qualified for a mortgage, and there's various things that you can do to qualify for the mortgage. Your roommates, like we talked about before, they can help you if they come with you to your new home. They can help you qualify because you'll have more monthly income, and you might feel a little bit more comfortable with the mortgage payment if you know that your roommate's going to be paying part of it, and you don't feel like it's such a large payment for you to take in. Homes with a rental unit can help you qualify. If you get a home that has like a duplex and there's a renter already in the duplex and they want to stay and you're like, please stay, I'd love that. You can use that income that renter's already paying to help you qualify. We'll actually take that income and we'll add it to how much money you already make. So that way we can get a really good overview of how much you make plus your potential rental income, which helps you qualify for more. Your schooling. A lot of clients are worried because they just got into the job market, they're fresh out of college, and they don't have a lot of experience in their job. That's fine. Frontwave Credit Union doesn't count your schooling as not working. So your schooling actually counts as job history for you. So you went to school for 8 years to become a lawyer, and now you finally got into the industry. That's fine. That 8 years was helping you get into the industry. So we're going to count that towards your job history. So don't let that stop you just because you don't have 2 years of job history. A lot of clients are worried because of their student loans. Student loans do not mean that you cannot qualify for a mortgage. You can still qualify. So talk to us about that, because the payments, as long as you're comfortable with all the payments, there's a lot of ways we can make the student loans work for you without stopping you from getting into a home. Frontwave Credit Union has so many different loan options, and I'm going to go over a couple different options that we do offer for you. Obviously, we have VA loans. We were a military bank originally, so VA loans we do a lot of. If you are a veteran or active duty military, you're going to love the VA loan. I don't want to say you need to buy a house now, but the VA loan is so great to you. It offers no money down. You can use the VA loan over and over and over again. So you don't have to save it until you find your perfect home. You can buy a home now and then use it again later. The VA loan is very flexible, but the no down payment and the very low interest rate, and I'm talking rates that are lower than all of our other loans, it's a great product. We try to help you out with getting qualified quickly on the VA loan, but most importantly, once you guys are qualified, we're very fast for getting it done because we know a lot of people who are selling their homes need to be out of their homes quickly. So we make sure that even though it's a VA loan, it's done very quickly for you. We also have options for clients who are not military, but they also don't have any money to put down. So if you're non-military, you can still buy a house with no money down, which is crazy sometimes. People don't believe this. It's a regular 30-year loan. But at Frontwave Credit Union, we have the option to do it. As long as you have good credit history and you've got a few months of payments in the bank, just as like a buffer to make sure that you've got some cushion in your bank account, you can take advantage of our no money down loan. And your sellers can pay your closing costs for you. A family member can gift your closing costs for you. So that means that all the excess fees that occur when you buy a house, where you have to pay the county and you have to pay an escrow and title company, those fees, they can still be taken care of by someone else. So you can take advantage of the real true no money option. San Diego County currently has a limit of $750,000. So but talk to me if you want to get into that kind of a product. It's a great option. We offer in Riverside County and in San Diego County. We also have one of my personal favorites, the first-time home buyer's loan. This loan is very flexible. It's built for the first-time home buyer. The first-time home buyer is anyone who hasn't purchased a home in the past 3 years. So you had a home in the past, you sold it, you've been renting. Welcome back to first-time home buyers. You're in that category again. With that loan, you only need 3% down. And that 3% that you put down allows you to get into the home. We will discount your mortgage insurance, which means that your monthly payment is lower right off the bat. And that's just something Frontwave Credit Union does for you. So you versus a buyer who already has owned a home in the past, you're going to have a lower payment just because you're a first-time home buyer. Your roommates, like I said, can come with you. They can go on the loan with you. You don't have to be married to the person who's on the application with you. You can use someone else on the application if you'd like. And even if your credit's not perfect, this loan is built for that kind of, for you too, because we're not going to, credit that's a little bit lower isn't going to give you a higher interest rate. So it's really nice. A lot of clients who come to this product end up being able to afford more because we don't jack up the rate because their credit score isn't perfect. So when you have a lower interest rate, you have a lower payment. So it's really nice for our first-time home buyers. Most importantly, most of our first-time home buyers don't have 20% to put down. So we know that, and we're not going to penalize you. The 3% down is all you need to get into the home. We talked a little bit about down payment and closing costs casually a few minutes ago, but your closing costs are the fees that you pay to third parties to buy a home. So you buy the home, you have to put the money down or not, depending on the loan you choose. But either way, you're going to have to pay some costs to the people who help take care of the loan for you. The credit union charges you very little fees. Most of the fees are going to come from the third parties that you're using to buy the house. But a lot of our loans will pay the closing costs for you if you'd like. You can also have the sellers pay it for you. It's up to you. You can have it as a gift. You can pay it out of pocket. Whatever situation works best for you. But don't let that stop you from buying a house, because we can take care of the closing costs for you if you need to. I'd rather you be getting into a home and doing it sooner rather than waiting a few years to save up your closing cost, because it may put you in a position to not be able to qualify for a home because either the rates are higher or the property values are higher. But when it comes to taking money to cover the closing costs and the down payment, you can take it from multiple sources. A lot of people don't think about these sources. They just think checking and savings accounts. That's where you take the money from. But there's also IRAs, there's 401ks, there's friends and family. I had a client recently and they were getting married, and that's what they did. All their wedding gifts, they were like, just give us cash, or the gift we would like is our down payment of our home. So that's what they did. And you can definitely do that. So at the end of the loan, we had all these wires coming in from family members to help pay for their closing costs. So whatever avenue you want to take advantage of. I just recently had a client who had a gift from his employer. So talk to employers about what they have for their employees about for down payments. A lot of times it's part of a corporate package that you can help negotiate too. So if you are looking into a new job, maybe talk to them about that if that's something that you want to get into buying a home soon.
So the process, what's the process of buying a home? Well, first you have coffee with a realtor and you figure out what it is that you're looking for. Do you want a 3-bedroom home? Do you want a 2-bedroom home? Do you want a condo by the beach? Do you want a yard and a pool? All of those kinds of things we figure out what's most important to you. And then at the same time, you're going to get pre-qualified with Autumn. So you're going to actually get a realistic idea of, okay, this is how much money I make every month. And this is how much of that I can use to actually buy a house with. And so then that equates to like 400,000, 500,000. And you'd be really surprised what you can actually afford. And then you're going to start the process of searching. So there's a lot of third-party websites where you can look for homes and see the beautiful photos. And you used to be able to go to open houses, but now they're all virtual. So when you hook up with the realtor, what's awesome is that you have access to the multiple listing services, which is it's what like populates Zillow and Redfin and Trulia with all of their listings. And so you start the search, and when you find a house that you like, we schedule a showing. Right now, you have to actually sign a special form called a PED. It's just make sure that you don't have the coronavirus, and it gives you and another person access with the realtor to go and see the house. And when you find a house that's like perfect for you, you write an offer. And so everything can be done virtually now. Like when you go and see the houses, you can go in person, which I recommend just because it's different than in video, but you just wear a mask and sometimes gloves. And then when you write the offer, that can all be done online. And so right now, I always recommend that we do a comparative market analysis to make sure that the house is priced at the actual value. You just see what has sold around nearby in the neighborhood and look at the updates to make it sure it's the same. So you write the offer, and if they accept, which sometimes there's a counter, but once they accept, you open escrow. And escrow is a word that we use all the time, and not a lot of people know what it means. And in Southern California, it stands for a third party that is neutral. So it's actually a company, a place that you can go, but right now it's all virtual, and pretty much they hold money until both parties agree. So there's a lot of questions that happen. Like once you like a house, you got to make sure that there's no issues with it and that you qualify for the loan. And so that whole time period is called escrow. And that can be a span of 30 days to 45 days. Sometimes longer. Right now, people are asking for short escrows, so sometimes they can be even as short as 21 days. So you open escrow, and within the first 3 days, you're going to deposit an earnest money, and that can be, $1,000 or $3,000. That's something that you decide in the offer, and that money isn't additional money to your down payment or your closing costs, that actually already goes to paying it. So it just secures the house and shows the seller that you're serious. And within the first 17 days, you're going to hire an inspector. And that inspector costs around $500. And he or she is going to go and examine the house from top to bottom. They'll take pictures of the roof, underneath the house, the plumbing system, any outlets that don't have covers, every little thing. And then they give you this pretty long report, and you sit down with myself and we're going to review it, and we're going to say, hey, what's a big issue and what do we want to ask the seller to fix or to give us a credit or to reduce the price. And that's a negotiation. And during this whole entire period, that money and that saying that you're going to buy the house is actually refundable. So say you find out that the house, the plumbing is shot and it needs completely to be replumbed, and the seller says, hey, guess what, I'm not going to fix that. Well, you can walk away. And I think a lot of first-time home buyers don't know that. They think, oh no, I wrote an offer, like I'm going to be stuck with this house no matter what. Well, it's a negotiation like everything. And so you are not set in stone to buy that house. You can walk away scot-free, except for the cost of your inspection. So that's kind of a sense of security, I think, for a lot of people. And the other thing that's happening at the same time is an appraisal, which is really to do with the loan. So I'll let Autumn talk about that.
Yeah, the appraisal is separate from the home inspection. It doesn't check all the nitty gritty qualities of the house. It just checks the overall value of the house. They might do a small amount of structural inspection on it, but in general, the appraisal just makes sure that the value that is listed on your offer or the amount you're paying for the home matches what the home's worth. Because we don't, at Frontwave, don't want you to get into a position where you're buying a house that's worth way more than everyone else in the area. We want to make sure that you're getting a house that's appropriately priced. And that's why we do the appraisal, to make sure that you're in a good place with that.
So then there's a loan contingency, which you'll be talking with Autumn directly about.
Yeah, and the loan contingency, it's a little bit after the appraisal's done. Once the appraisal comes back and your inspection's back and everything looks good, we'll go ahead and say your loan's all approved. We know what it's worth. We know that you like the home. We know that your income's where it needs to be, and everything looks right from the way you applied. At that point, we'll say you're good to go. We're happy to give you this loan. And so we'll issue a loan, a full loan approval, which is great because that means at that point, you can finish off the process and you'll get to the place where you will sign all your final loan docs. We'll give you the clear to close term, and that means you go to the escrow office, a notary will come out to you, you'll sign all of your paperwork for the loan. You and myself will talk about the paperwork to make sure everything matches up to what you want. We'll go over the payment dates to make sure you're comfortable with everything. We'll talk about how to pay the mortgage, where to go every month. Which, spoiler alert, you come to Frontwave for the next 30 years, we never saw your loan, so it's very easy. But we'll take care of that for you so that you're very comfortable with the process because it's your home now. You did it.
Yeah, so then you do a final inspection. So we just make sure that once the seller has moved out, that before you actually fund the loan, that it's in the same condition as it was when you first saw it and inspected it. And then you get the keys, and that's like the best day ever for you. And it's a really sad day for us because we don't get to see you every single day and call you and text you all the time. But we're always available, and we'll stop by just to see how everything's going. And yeah, it's super exciting. That final day is like, oh my gosh, it's real.
So when it comes to buying a house, first-time home buyers, eighth-time home buyers, there's mistakes to be made whatever situation you're in. A lot of mistakes are things that you don't necessarily think about because some of them are bettering yourself and you don't realize how it's going to affect your mortgage. I had a client who, great client, great loan, we were almost done. At the end of the loan, everything was verified. And at the end, she took a new job. She took her dream job. She was getting paid more, but it was the last 2 weeks of the loan. So when we called at the end of the loan to verify, like, hey, does so-and-so work there? They said, no. And we said, oh, okay, that's not great. So things like that could really affect your loan because we have to wait now to get your new job verified and get pay stubs for your new job, and it can just throw off the timeline significantly. Fortunately, her sellers were nice and they allowed us to extend the timeline, but unfortunately for her, she had to take a higher interest rate because the timeline got extended so long that she was into the next rate cycle. So little things like that, even if it's your dream job and even if things are getting bettered for your situation financially, it can still affect your mortgage. So save your promotion for a few more months.
Well, just talk to Autumn before you do anything.
Yeah, any change in your circumstances from your original application. Taking on new debt could happen very easily. You co-sign for somebody because they need to buy a car. You're like, oh, it's not my debt, it's their debt. I just co-signed. Things like that, they actually show up on your credit. So at the end of the loan, we double check even your credit score to make sure nothing changes. And if all of a sudden we see a car loan, it could really completely mess up your deal, even if it's not your actual debt, you're just helping someone else. Running your credit is a big one because it happens so innocently. You could do little things like upgrade your cell phone plan, change one of your services for I think gas and electric runs your credit down too. Little things like that can change your credit score. And if you are already in a tail end of qualifying, like barely getting in there with your credit score, running your credit could potentially lead you to not qualify anymore because every time you run your credit, your score goes down a little bit. It may be nothing. Some people worry about it and they have perfect credit, and I say, you're fine. You've got plenty of room to wiggle, but not everyone has that situation. So before you run your credit, just give me a call. Don't apply for anything new. Don't change anything. Don't give out your social until after the loan's done.
And it might feel silly being like, hey, Autumn, is it okay if I do this? But it's better to be safe than sorry when you're in that escrow period.
Exactly. And then a lot of my clients, and I'm surprised every time it happens because I always think we talked about it, but a lot of my clients will have money that they keep at home. And that's great. I'm glad you have a savings account somewhere else and you've got your way of saving and everything. But any big changes to your account balances, like your checking account balances, can have a huge effect on the application. So if you have money cash at home and you want to use it towards buying a house, that's great. Let's talk about it first, though. Don't just toss it into your checking account because we collect bank statements, and if we see that all of a sudden you have $10,000 in your checking account that wasn't there last week, we're going to have some questions. And those questions might take a while to answer, and it might slow down your mortgage process. And depending on what the story is, it may end up making it where you don't qualify because we can't use that money. So please talk to me before you make any changes to your accounts. Even if it's for fun stuff like a trip, just let me know so I can make sure we document it the right way.
So why do you use a realtor in this process? Because I'll tell you, it's even when I was buying my own home and I was my own realtor, I was freaking out. It's a really emotional process because it's a huge life change. And it's nice to have someone who does it all the time guide you through it. And actually in Southern California, the seller pays the realtors. So you don't as a buyer. And a lot of people will ask me like, when do I pay you? And I'm like, you don't. The seller does. So it's something that you're going to think about when you actually go to sell your home. But we'll talk about that then. And then we have access to the MLS, which is, like I mentioned before, it's the multiple listing services, which is a database only available to realtors. It's what populates Zillow, Trulia, Redfin, Realtor.com, all of those websites. All the information comes from the MLS first. And now we have this really cool thing called coming soon. So when, like right now, there's not as many homes for sale as there used to be. And so what's really cool is a realtor can actually see what's about to come for sale before it does. It's a new thing and it's not on all the other websites. So we can see what's coming soon before anybody else. And then we also have a caravan, which is like my office is full of 100 agents and we have offices all throughout Southern California. And what's really cool is like I have a buyer who is looking for a very specific type of home. We don't see any of it online. I can right now put it on our workplace Facebook page and someone will respond like, hey, guess what? I have a seller who's thinking about selling in a month. and this is what their house looks like, and then we can schedule a showing before it even goes on the market. So that's really cool, especially now in the time where there's not as much for sale. And then the hugest reason why you hire a realtor, I can't emphasize this enough, is it's just like if you were going to court. You're going to get a lawyer to negotiate your side, because having a third party who knows the process, knows the normal negotiations, and can work for your benefit when you're emotionally invested and they're not as emotionally invested, they can fight for you to have that plumbing problem repaired, to reduce the price because the appraisal came in lower than your purchase price. So there's a lot of places where we negotiate for you where you wouldn't even know is a negotiation, and that's why you hire an expert.
In addition to that, Frontwave Credit Union is very unique because we are a credit union, and a lot of the loans that we offer are just our loans. They're not loans you can get elsewhere. So we talked about the no money down loan. There's only one other company in the area that I know that has a no money down loan, and their rates are significantly higher than our rates. So having a local credit union with our own products that are built for our community and for our clients and for first-time home buyers and repeat home buyers makes it very competitive for you to look to Frontwave Credit Union. In addition to that, you're using a credit union, so your fees are actually going to be a little bit lower typically with your closing cost. When you're working with me directly, you actually have access to me 7 days a week. Our mortgage loan officers aren't necessarily tied to their desk at a branch from 9 to 5 and then good luck catching me until next week. It's not like that. Once you start working with me, you've got my work cell phone number, so text me, call me when you have questions or concerns, or there's gonna be emotional outbursts when it comes to buying a house because there's a lot of things that you have to go through, and I don't want you to ever feel uncomfortable or feel like you don't know what's happening next. So you have access to me to reach out to me to help you with that. I'm very big into education, so please ask away, please call and text. I want you to feel very comfortable and like you know what you're doing. Everything. You tell your friends how to buy a house when we're done with this. Our interest rates are very competitive, especially the fact that your credit score doesn't change the rates for a lot of our products, which makes it so easy to qualify, and it makes your payments so much cheaper than if we were hitting you every time you're a lot of companies will increase your interest rate and everything because of your credit score, but because we don't have that, it makes our rates very competitive. We're also based locally. We're a San Diego County Credit Union. We're in Riverside County. We're in San Bernardino County. So we're a very local credit union. All of our lending is done in one place, which means that it's very quick to get things done. You don't have a lot of lag time when people take care of things. The process moves very smoothly and quickly because we're all kind of in one place. Most importantly, though, in this market right now, you're going to put offers on homes, and these clients who are selling their homes, or people who are selling their homes, are going to see 10 different offers, and it might be overwhelming for them, and they don't know which offer is stronger. But when it comes to our pre-approvals here at Frontwave Credit Union, they hold more value because we actually qualify you completely. So as we talk about, when we first talk, we'll talk about your income, and I'll get proof of your income. We'll talk about your savings accounts. I'll get proof of your savings accounts. We'll make sure that what we have in the application to qualify you matches what you had told us. That way you know that the amount you're pre-approved for, that's actually how much you can afford. And the payments that we talk about, you know how much you're going to be paying. So you're in a better position. And realtors will convey that thought to the other realtors, let them know, like, hey, this person, look at this pre-approval that Frontwave offered them. They've done all the work already. There's not a lot of gray area left to get them qualified. So it definitely holds more value, and it makes your offer a little bit stronger against someone who goes online really quick and types in how much they make and, oh, there's a pre-approval letter. It's not like that with us. It's easy, but it's not that easy.
And it's also nice too when you have a listing and you see Autumn's pre-approval, you can call her and say, hey, is this real? And she answers the phone. Like other companies, they won't. And so you never get an answer if, hey, is this a real pre-approval or not? And we know it is because we talked to Autumn directly.
And I'm probably on the email of the offer too, saying, hi, call me if you need anything. So.
Yeah, she probably already called the listing agent on your behalf.
To talk you up. But anyways, you have a nice advantage with Frontwave Credit Union. You have that personalized service. All right, guys. Well, if there's any questions, we'd love to talk to you guys about what questions you may have.
Oh,
We do
cool.
actually have a lot of questions in the chat about this topic, guys, and you're really clearly passionate about it. So we're excited to have you jump in and ask some of these. So the first one we have is for employers. So if you're looking to set up best practices on the employer down payment programs, do you guys have any resources or assistance on where you can point them in the right direction on that?
I don't have any direct resources. I have seen a lot when it comes to when I looking online, but I was looking under the category of what to negotiate for on a new job or corporate benefits that you should ask for. Um, when it comes to negotiating that, I would say pick things that are important to you. Obviously, getting the first time home buyer discount is important, but then also pick things that the employer would typically offer and maybe try to leverage that saying, I don't really need that benefit. Can we maybe talk about this benefit instead? That way the employer doesn't feel like they're going out of pocket too much if you can offset it with something else. In addition to that, you can also talk about the benefit of home ownership for the employer because it makes you a stronger employee. You're not going to be going somewhere because you have a mortgage tied to it. You're going to be at that job. You're putting your foot in the sand of where the company is. And not to mention, you're going to be a lot more loyal to your employer, knowing that they helped you get into your first house and probably be a much stronger employee because of that.
Yeah, definitely.
Agreed. Well, thank you for that. The next one we have is, what are the income requirements, if there are any?
So the income requirements, they're very, it's a broad subject there. But you have to be able to afford your home. So typically, at least a little bit more than half of your income, less than half of your income can be used towards a mortgage. We won't max you out and say, oh, half your money to a mortgage and half your money to everything else in your life. We're not going to do that. So your income needs to match the payment of the home that you're going with. If you'd like, call me. Whoever asked that question, my phone number will be on here. I can go over just a quick little scenario for you of how much do you make and how much that you probably qualify for something in this general range.
Yeah.
Yeah, but we're not going to overextend you.
I think that one will be a case by case kind of thing for sure. The next one we have is, if you do pay off your credit card balance but don't close the credit card itself, would that hinder your home buying process?
Don't close your credit card. Please don't close your credit cards. I forgot to mention that. Never close your credit cards. It can bring down your credit score. So yes, pay it down to 0, but don't close it. Keep it open. Yeah.
Even if you don't use it?
Even if you don't use it, because you have all that good credit history tied up in that credit card. And as soon as you close it, it's gone. So you've had a credit card for 10 years since you started college and it's $300 and you're like, I don't need this cellular credit card. Keep that credit card. If it's not charging you a fee, keep it open, or try to negotiate with the credit card company if it is charging you a fee. Can I go back to that other question though about the income requirement?
Absolutely. Yeah.
Some people with the first time home buyer loan, some companies have an income limit on the cap of how much you can make. We have no caps on how much you can make. So you can qualify for all these loans, even if you make a whole lot of money and you're a first time home buyer. I don't know if that's what you're getting to, but I'll just throw that out there.
Sure. Okay, and then looks like the next one we have here, how are auto loans viewed? Are they viewed as regular debts, or is there any forgiveness or leniency when it comes to assessing the home loan rate?
Yeah, so your auto loans are just a regular debt. They're a nice debt because there's not a whole lot of gray area like a credit card where like, is it how much is your payment each month? It changes and whatnot as you pay down the balance. The auto loans are a nice, easy debt. And if you're almost finished paying off your auto loan, depending on the situation, we may not even count that against you if you only have a few months left. We're not gonna make you have to pay for a $500 payment even though you have a month left on it, kind of a thing. So they are definitely counted for you, but it's not a bad hit on it at all. Almost everyone has an auto loan. So,
well, it's a line of credit too, which you need to have certain amounts of lines of credit in order to have good credit. So talk to Autumn before you make any big decisions.
Yeah, don't feel like you have to pay that off just to get a mortgage loan.
Okay, good to know.
Yeah, we're only going to take the monthly payment of your car loan. We're not going to take, even if you pay extra, you're like, I pay $500, my payment's $200. We're only going to count the $200 as your payment obligation.
Awesome. But the next one we have are, what are some reasons why a large sum of money put into an account could not be used? You mentioned that briefly.
Yeah. When it comes to a mortgage, everything has to be tracked, traced, and recorded. So a large sum of money could flag, we have no idea where it came from, so it flags an investigation because we're now looking to see, where did this money come from? Did you take out a personal loan and you now have a huge payment to cover these funds? We just need to have a record of how they got there so that we don't have to worry for the worst, that there's some horrible loan out there under your name or something that you have to pay this high payment because that's where the funds came from. So that's why I say, if you're going to put it into your account, let me know so we can make sure we document it accordingly and it doesn't come up at the end of the loan where we're trying to backtrack and figure out where it came from.
How would you document it accordingly?
It just depends. So many different situations.
Slow increments deposited, or?
It just depends on the situation. Give me a call. I'll help you through it and everything.
Awesome.
Yeah.
All right, so we have a couple more questions here. One more is, what type of insurance coverage will I need?
That's a great question. And that is a question for the insurance company.
Sure.
What you do is, when you're starting to buy a house, you choose whoever you want to use for insurance. We do not care who you use. It could be anyone. It could be your Uncle Bob's company. It could be a real company, whichever you want to go with. But you'll go to them, you'll ask for an insurance quote. They'll give you an address. You'll give them your address, and they will go and tell you what the minimum coverage is required for that home. You can opt to have higher insurance if you like. If you want to put a bunch of add-ons, that's totally fine. But the insurance companies know what the minimums are for a mortgage. And that's all you need is the minimum, but you can do as much as you like.
I would recommend going to your car insurance company because usually if you bundle it, you'll get a discount. Not always the case. I always recommend that you
shop around.
Yeah, it's not that difficult to shop, and yeah.
Awesome.
It's probably like $50 extra a month is probably how much it would add to your payment. Yeah, 50 to 100.
Yeah, it looks like things like that will vary depending on person to person, company to company. And last question we have here, do you guys have any resources on people looking to find out costs for property taxes in the area?
Oh, yeah. So you can look that up online, but for North County, average 1.2% of the purchase price. And when you go on like the apps to do your estimated mortgage cost, that's a factor in there. So you can just add 1.2%. Some like Vista, I think, is 1.1, and then Oceanside might be 1.2. It doesn't go much higher than that at all. So if you average 1.2%, then you'll be safe.
And if you're really looking at a specific property, as you're working with Jesselyn, she'll go over that with you. When you guys look at the numbers and the addresses and talk about the home, she can let you know specifically for that property.
Yeah, I always like to let people know, exactly what your payment would be, not just the mortgage and interest, but property taxes, home insurance, and then we usually ask the sellers the estimated utility cost, because that's something that you're going to be paying. And you already pay where you live, but it's when you change houses, maybe you have an extra bathroom and it's going to charge a little bit more on water, or maybe the house has solar and you actually have no payment at all. So everything is fluctuating. And any other questions?
It looks like that's it for questions today, guys.
Well, I hope to hear from some of you guys personally. Please reach out to us and we can get into more specifics, because I don't want to get too specific and turn someone else away, but let's talk about each of your scenarios when you have time.
Awesome. Well, thanks so much again, Autumn, and thanks so much again, Jesselyn, for sharing your information. It's great to have you guys on here and the whole Frontwave team, and we look forward to the next webinar you guys present.
Thanks for having us.
Thank you. Yeah.
Thank you.